All right, so let's talk about how to kind of gauge the market Foos 4 style. Obviously, I'm completely long bias. I'm not typically, going short. I do short, once in a blue moon, but it's not my thing. I wouldn't follow my recommendations on short sells. I've made some huge short sell trades before, but it's not my thing. It's not what I'm an expert at. I'm an expert at going long and finding Foos 4 breakouts. And so obviously the market isn't always going to be in bull mode. There's not going to be a lot of buying pressure, and so you need to kind of be able to gauge when you can be really confident in swing trades and let the patterns kind of play out, or if you just need to kind of scalp these Foos 4 F pattern intraday breakouts from the morning and just kind of be in and out and be on with your way. And so kind of how I gauge that is by looking at the 13 EMA, just as I do on my positions. It also transfers over to looking at the major indexes. I personally look at the Dow, which is typically the ticker symbol INDU, whatever software charting program you're using. So when we're trending the 13 EMA on the Dow, just as in when a stock is trending the 13 EMA after a Foos 4 pattern, that typically means that the market can be continuing to go higher, and we might, market's going to just keep going up. So obviously, if you're buying into a stock, if the market's in free fall, it's going to be difficult to have your stock keep going up, unless there's some kind of huge news pushing the stock. But typically stocks, generally kind of correlate with the sentiment of the overall market. So when the market is, and the Dow is, riding the 13 EMA trend, Foos 4 swing trades are, much more likely to see continuations following the breakout. When the Dow Jones is trending below the 13 EMA, it might be a much better idea to maybe take smaller positions. Definitely take profits quicker. Maybe set your stops quicker, because a lot of breakout stocks can quickly turn into reversals, especially in the first 2 hours. As I said before, F1 pattern stocks that break out of an F pattern in the first 2 hours, sometimes they'll break out at that first 2 hour F pattern, and that's all you're going to get. It might just spike up 30 cents. You can get in, get out, make $500, make $2,000. All of a sudden the stock's back down where you bought it from, and if you didn't sell and just lock in that quick profit because all of a sudden the market's crapping, you're gonna regret it. And a lot of the times I've been really focused on just F patterns and trying to trade that morning. I'll get in, trade that first 2 hours and get out, and it's been very beneficial. On the other hand, if you get too caught up in those morning patterns, you miss some huge swing trades. As I said before, when a stock breaks down that 13 EMA on an intraday F pattern chart, it doesn't mean that it's the end of the world and that stock is done for the day. There's a lot of breaks ups and breakdowns of the 13 EMA on an intraday chart overall, so you can miss out on some huge swing trades. And I actually have missed out on a lot of big trades over the past 4 months, because the market has just been pretty chaotic and actually hasn't been trending the 13 EMA to the upside or downside. It's been chopping all over the place, but generally going up overall. So I've still had a great year. I'm up over $105,000. So into the six figures. We got about over 2 months left in the year. So, and November to December are typically two of my best months of the year. As always here, I'm saying summers are typically slow. We're just coming out of summer. It's about mid-October, and August is usually pretty chaotic. I think I was listening to CNBC the other day, and it was something like August has historically been the worst month in the market for the past, I think, like 100 years or something. So I think just everybody, is off doing their stuff, whatever, not really being very market oriented in August, just because it's summertime in the U.S. and it's just slow time of the year for all business. So usually starting in November, that's when things start kind of really kicking into momentum, and that's usually my some of my best months of the year. Is November through about March is usually when I do very well. For example, let's just look at my Profitly chart here. This is from November 1st to March 1st of 2012. So November 1st, 2011 and March 1st, 2012, I had verified profits of $84,000. So, you know, in about 4 or 5 months right there, just killed it. You know, it was just bang, boom, here we go. Just lots of great trades that rolled through here, and consistent patterns that were coming forward. If we look at the Dow during that time, where are we at back in March, about November, you can see the market kind of bottomed out here in October. So I started in March that date. I don't even know what I made back here. I could kick that back and see, but just for example's sake, you know, November through December is usually when the market's kind of starting to kick into gear for me. And as you can see, you know, the market did trend in October. The 13 EMA, the yellow line here is the 13 EMA. And we actually did get a 50-day moving average 13 EMA cross, which is another thing that I kind of look at here as well, which is kind of a longer term indicator on the Dow. As you can see, from about December up until about March, we had a great looking trend along the 13 EMA. The stocks were up, things were looking good, and I just ripped it from about November to March. You know, swing trades were working out. You could buy into Foos 4 breakouts, and you were seeing solid continuations. Then we finally did get a breakdown in the 13 EMA right about here. And so, you know, it's always, you know, 13 EMA is never perfect, but a breakdown is definitely, you know, a sign of a potential slowdown in that trend, or, you know, an actual reversal. In this case, you know, things just got really volatile, and it did pop back up, but then eventually things just got real volatile before we ended up breaking down. So that was kind of an indicator of, you know, some volatile times to come. And throughout here, you know, we're kind of just chopping back and forth. When the market's chopping through the 13 EMA, like back here, see, this is August of 2011. I was gone on vacation here in Thailand and Malaysia and Australia for about a month for my birthday. So this kind of trading is not fun, you know, regardless of it's, you know, it does create scalping opportunities, but it's just very flip-flop. You can see the market was up, down, up, down, up, you know, ripping around 500 points back and forth. So there's no real direction. Hard to say what the hell is going on. This is just kind of chaos. So it's very difficult times for trading, especially swing trading during this kind of action is very difficult. So you need to be you know, trading that morning pops, getting out, and not trying to hold anything for too long when there's extreme volatility like that, because you can get really whipped around and just mess with your head a lot. But going forward here, once we did finally break down the 13 EMA, this was, you know, March, made about 84,000 up until March, and then things have been since then, you know, pretty hectic. We actually did break down that ascending channel here on the Dow, and then did get that 13 EMA cross back, but down below the 50-day moving average. As you can see here, the 13 EMA crossed back down below the 50 EMA, which is the pink moving average indicator here, and from there we just got a huge decline in the market. But, you know, it was due. The market had been up significantly from October up to about May, right as we headed into summertime. So then summertime, actually, you know, this year was, you know, not that bad. It wasn't as bad as last year where we got that huge sell-off in August, but it was kind of the same action, although we did get, you know, some upside movement here, you know, but it was very choppy. This trading channel that we've been in here, just bouncing back and forth with the 13 EMA has been, you know, hard to kind of decipher the direction of the market, because there isn't really any you know, calm trend. It's a very volatile trend. What we've seen here on the Dow, you know, we had a huge decline followed by you know, up and down, up and down, up and down, up and down, about what is it, 1, 2, 3, 4, 5, 6, 7 7 moves of about 500 points there, just up and down, chopping back and forth. No real market direction before it finally started kicking back up to the upside of the 13 EMA here. in the Dow. So through about June, through about August or so, heading into the summertime, even though the market was up, this was just kind of stressful times of trading. It was difficult to gauge whether to be trying to swing something or just trading the morning scalps. So a lot of the times it's difficult to kind of gauge what's been going on and have confidence in those swing trades, because a lot of times if you try to swing trade something, you try to trade that breakout, if the market's flipping all over the place, a breakout can quickly reverse on you, and all of a sudden you're wishing you would have taken that profit. But on the other hand, sometimes you get too focused, as always, on the intraday action, and you actually miss out on some of the big swing trades, which I have actually a lot this year over the past couple months. But overall, still been doing good. Let's look at basically the next. This was March 2012 up until now. 10/16, October 16th, I've made $57,000. So not a huge amount of gains, but overall this year I'm up $105,000. So making six figures. Still 2.5 months left of two of my favorite months of the year. So definitely potential to make $20,000 to $40,000 is even definitely possible over the next 2.5 months. Basically what I just try to do is follow this 13 EMA. Obviously it's been very difficult, but you got to do the best you can. And when you're trending the 13 EMA, that's when I absolutely kill it. That's when FUS4 patterns are the best. So throughout here, sections like this, when we're just chopping back and forth, you kind of just got to be a hybrid trader of trying to trade, lock in those profits, but trying to decipher those big trades that could potentially be the big ones, like RPRX. This is one that I was in Mexico that I'll be doing a trade review on here shortly. I was just in Mexico in August for my birthday. I made over $10,000 on this stock. This is a perfect FUS pattern. And it also had a perfect F pattern breakout right as it was breaking out of this force pattern as well. But you can see here, as the force pattern broke out, rode that 13 EMA perfectly until finally breaking down in the 15-ish area. I got a little antsy, sold in the mid 12-ish area, but I still made 10 grand on the stock. And these FUS4 patterns were definitely around to trade these, and we took full advantage of this. But there'll be a full trade review of this here coming up shortly. But other stocks like DNDN, this is a revival pattern where I tried to buy into this stock right here. Quickly just reversed on me. I lost, and this thing has just completely came all the way back down. So you gotta be able to take those quick profits or those quick losses on some of these stocks. On the other hand, like JRCC, sometimes you take that quick loss and you totally regret it. Like JRCC, this was a great looking revival pattern. I went long on the red to green move here at about 380. Next thing you know, this ripped up huge the next day, and I was definitely butthurt about that. So I was trying to play it too safe. It was a great looking FUS revival pattern. Played it way too safe, and I ended up losing, I think, like $600 on this when I could have made like almost 3,000. So it's hard to decipher some of these stocks sometimes, especially when the market is like it is right now, where it's just kind of chopping back and forth. But you kind of got to do it the best you can. As you can see right now, we're back down below the 13 EMA, and even potentially breaking down below this channel here. You can see last time we broke down a channel, we had a pretty significant sell-off that happened. So here we're kind of in a same style channel, and at the 50-day moving average support here as well. So we might even see a breakdown. But overall, basically what I try to do is, try to look at the 13 EMA on the Dow. When we're looking good above it, I'm more confident in swing trades. When we're, trending below it, I definitely try to focus more on quick profits. Focus on that first 2 hours, lock in quick gains, at least partial quick gains, and potentially let the rest go as a swing trade.
What's up, guys? Just wanted to do a video on level 2 and what I look at when I'm trading. I'm looking at level 2 all day long. When I'm trading, it's not only about chart patterns and whatnot. Level 2 also plays a big role in my decision making for precision entries, also my exits as well. If all of a sudden I see, a wall of sellers or something, or if I see a bid being taken out, and I can see that on level 2, it might influence me to sell a stock. So basically what we're looking at here, this is what you call a level 2 montage. This little box right here, this is a ticker ADMP. This is actually a stock that I'm currently in. This is a gold pattern slash revival or not revival, force pattern. Basically, we had that breakout here. I initially entered at 80 cents, sold up near 104, made $2,000. Now I'm back in here looking for this to break out of this flag pattern again around 110. It's a relatively thin stock, so it's thin. But there's definitely the pattern there. But looking at level 2, that kind of helps me gauge the position a little bit better. I also look at time and sales. I have it lined up right here. This is my Speed Trader Pro platform that we're looking at right here. So looking at this right here, what is this? This is what's called the bid. What's on the left side is the bid or buyers. On the right side is called the ask or sellers. Basically, all that you see here, all these numbers right here, these are people that have a bid on this stock. So there's somebody sitting here they're offering to buy this stock at $1.03. So somebody that already owns the stock can decide to sell them their shares at 103, but only 500 shares. Every one of these numbers, this is a multiplier of 100 shares. So this 5 just means that there's only 500 shares being offered at $1.03. So I have 18,000 shares right now. So if I wanted to get rid of this stock, being that it's relatively low volume and low liquidity, I couldn't get rid of all my shares at 103 right now because there's nobody sitting here on the bid for me to sell to. We only have 1,500 shares plus another 3,000, another 2,700 at 1. So there's not that many people to sell into if I actually wanted to sell my position right here at 103. So that's the danger of buying into a stock like this. It can easily drop on low volume. If I all of a sudden decided to sell all my 18,000 shares, I could drop it down below 1 very quickly just because I have that many shares of a stock and there's nobody to sell to. So these are the only current existing people willing to buy the stock. But there is a boatload of hidden people on the sidelines that don't actually leave their offers on the table on a stock like ADMP or any stock. Obviously, I have 18,000 shares, or looks like 18,497 shares. I could all of a sudden throw an order out. So for example, I can say I wanted to buy an additional 5,000 shares here on ADMP. I could put in an order with a limit. Say what limit is basically what your maximum price you're willing to pay at 102. So basically, watch what's going to happen. If I push the buy button, there's going to see my bid here with the 50 next to it at 102. So now you can see that's my order right there. I just put in a bid to buy this stock at $1.02 for 5,000 shares. So now this kind of turns the tables a little bit. Level 2 is all about supply and demand. So as you can see here on ADMP, there's a lot of supply here. These are sellers. So there's people sitting here with a lot of shares that they want to get rid of this stock at 105. So it's going to take a lot of buyers. There's got to be buyers coming in and buy all these shares out to be able to break out above that level of 105. So as of right now, we're looking more so on in favor of the supply here. It's going to take us a lot of buyers to get this stock to go up. Or on the other hand, it's not going to take that many sellers to take out all these bids here in the $1 area. So that's kind of the whole supply demand thing. If I can, if the tables turn, all of a sudden we have, a huge amount of, people sitting on the bid that want to buy this stock. That means the demand for this stock is increasing, and it's much more likely to go up rather than down, because it's going to take a lot more sellers to take out these bids. So for example, let's say I put in another 15,000 share order at 102. For some reason that's not showing up here. Let's get rid of these orders. Now I just canceled those orders, so those are gone at 102. But let's try this again. For some reason that wasn't showing up. Now it's not showing up again. Let's try to fill a different route and see if that shows up here. Nope. Alright, so not sure what's going on there, but if I have it at 101 here on the bid, so we already have bids here at 101. If I put in a 15,000 shorter limit, order limit at 101, we're going to see that pop up on the bid side, and that's going to put more influence on the demand and increase that demand and have a little bit more influence on the buy side. But still to take out the ask side, there's all these sellers sitting here at 105, but if we could get those people to come in and buy, then that's going to influence, what I look at when I see that kind of thing. Say if I wanted to buy on a breakout above 105, if all of a sudden we start getting buyers in here, and I could see over here on the time and sales that, people were chipping away. We had a bunch of orders coming through at 105. This was decreasing, these numbers over here. That could influence me to potentially try to buy in at 105 and take out these sellers, which would lead us to the next level of the price going higher. But as of right now, like I said before, this is the supply, so we're much more likely, it's easier for us to fall basically. So whatever has more orders on each side, in this case there's orders on the supply, it's much easier for us to fall here because there's way more sellers on the table. As you can see, just at the 2,500 sell order just went through. Somebody just sold 2,500 shares to that person at 103. So if I can increase the demand a little bit by, I'm just going to, for example here, say if I did want to buy at 101, I don't already have 18,000 shares at 1, but just for illustration's sake, we can see that my order just came in on the bid side for 15,000 shares at 101. So that kind of increases the demand side here. So now for this stock to drop, somebody has to sell 15,000 shares to get this below to the next level, say to $1. So that's just kind of the influence of putting in supply and demand on this stock or any given stock. This is an illustration of a low liquidity stock, as in illustrating that you don't have to sell a lot of shares here to get this to drop, because it's a low volume stock. There's just nobody sitting here on the bid side. So easily, if I wanted to sell my 18,000 shares, let's get rid of my 150 or 15,000 share order. I could easily take out this entire 103, 101, and 1 level with just my order. If I put in a market order to sell everything, I would definitely drop this stock below $1, just because there's nobody sitting here on the bid that's currently available, offering that. But there's a lot of people on the sidelines as well, just as me on the sideline here, that people don't see me right now, but all of a sudden I put in this order at 101, there I am, bam, I just appeared. There's a lot of people sitting on the sidelines that don't actually have orders in the market there. So that was just a good example of how I look at level 2, and how I look at potentially buying or selling a stock based off of what the supply and demand is here. Also watching the time and sales, seeing if orders are going through to potentially start moving over 105. So in this case on ADMP, being that I'm long, I watch this all day long, trying to see if buyers are coming in to just try to take out all these sellers at 105. Because if we do break out above this big wall at 105, the chances of us moving higher are very likely, because there's a wall of resistance here. So if we break that, we're going to be hitting the next price, penny up at 106, 109, over here, the goal over here on the resistance of this chart, we hit 109 the other week or a few days ago, and then 110 was the last resistance spot. So a breakout above 110. Once we get up to 110 here on the level 2, there's probably going to be another wall looking like this at 110. So it's going to take a lot of buyers to get past that. But once you get past that resistance level, which is basically read on level 2 as a lot of people sitting on an ask, we can definitely move forward and hopefully break out to the upside.
Okay, so backed by popular demand, I'm finally going to reveal to you how to create a Foos 4 watch list. The Foos 4 DVD came out, and a lot of people were disappointed. Why the hell did I put the watch list in there? I didn't have the extra time, and I provided the watch list to you every day. There wasn't a need for teaching everybody the watch list. That was part of my job, was creating the watch list every day. But I think it'll be better to kind of get everybody on the same page here. I'm still going to be sending the watch list out every day, but having a watch list there and kind of understanding what the patterns are, I think this will help everybody out a little bit better, and maybe even help you understand what the watch list is a little bit better, rather than just looking at it and kind of wondering what the hell is going on. So I'm going to basically just do today's watch list. Today is October 3rd, 2012. So basically just going to go through my scans. I'll show you what website I use to create my watch list, what the screener criteria is. It's pretty basically, pretty simple, and I'll also show you the software for charting I use, and how to set up trendline alerts and whatnot. So let's get started. Here comes the Foos 4 watch list. Hope you guys are excited, because a lot of people have been looking forward to hearing about how I create the watch list and where I look. So let's get this ball rolling here. Okay, so basically what we got over here is TC2000. This is charting software. It actually cost me $90 per month. So a lot of people can't use this because they can't afford $90 per month. And that's fine. There's other charting software out there. There's Thinkorswim, which is Thinkorswim desktop. You can get this for free. It's slightly delayed, which definitely has its downsides unless you have a Scottrade account or a Thinkorswim account. But these are bar none my second most favorite charting software to use. Quote Tracker, quotetracker.com is another one that's relatively cheap, and you can get real-time data with that as well. Also, TD Ameritrade, if you have an account with them, they're going to hook you up with free real-time data. But anyways, this is TC2000. This is what I use. I have the Platinum package. It costs $90 a month. Over here, what I actually use to create my watch list is finviz.com. That's FINVIZ.com. I'm actually an elite member, meaning that I get real-time data. So anytime I want to do these scans, it's actually going to show me what the latest real-time data is on all of these charts. If you're not an elite member, which isn't a big deal, it's $50 a month. You can still get the same exact watch list and stuff, just during the daytime. When the market's open, you're not going to have real-time data. Also, as an elite member, you actually get intraday charts. So you can click the 5-minute intraday chart button here, and that's going to give you today's price action on an intraday level on a 5-minute time scale, which can be beneficial because you can actually scan for F pattern charts that are potentially forming up throughout the session. So if you're just going to be scanning through all these charts all day, looking at real-time data, you can potentially find some decent looking F pattern breakouts. That's not typically what I do, but it can definitely be beneficial. And you can also use this as a tool to kind of identify what stocks did have that F pattern breakout today, so you can kind of study that situation a little bit better. But let's just kind of get down to how I create the watch list. So today is October 3rd. Basically, so we'll go over the scan settings here. So when you go to finviz.com, you click this screener button right here, and that's going to take you to this page with this little shenanigans, all this stuff right here. And then you can click the descriptive tab right here. I don't mess around with fundamentals or technicals. You you can screw around with all that stuff if that's what you feel like doing. But there's a crap load of different kind of screeners and whatnot you can use. But I just go to descriptive. All I do here is very simple things. I look for stocks that are trading over 200,000 shares on average, because we need to have stocks that are trading on a regular basis. I want stocks that I can get in and out of if I'm throwing $10,000 to $20,000 at this position. As well, it needs to be scalable if a bunch of people are getting in and out of a trade. So even $200,000 or 200,000 shares is relatively low, especially if it's a dollar stock. But I need to have at least a little bit of a limit there, so we're trading stocks that are actually trading shares and are somewhat liquid. The other thing that I make sure of is current volume, at least over 300,000 shares. You can customize this to whatever you want. I just do 300,000. Let's say if we did under 100,000, there's going to be, I don't even see any real good examples here, but there'll be stocks here that trade way too thin. There's not going to be enough volume for someone like me to get in and out of, that's trading $10,000 to $20,000 positions. So I want to see stocks that are only trading today over 300,000 shares. And then the other criteria is I do price. So you can choose whatever you want here. FUS4 patterns form on all levels, but I prefer to trade stocks under $10 per share. Sometimes I go up in the air a little bit and trade stocks a little higher, but my main strategy, I like to trade stocks under $10 per share. Those are the stocks that are going to have the highest returns. Stocks that are going to be moving 10 to 20%, even higher than that a lot of the times, and very quickly. So let's just get started here. Now that we have all our criteria set, now we just have a list of stocks, a lot of stocks. We have 9 pages of stocks that are this large. So basically, all I'm doing is looking for stocks that are potentially looking like they could be forming up a FUS4 pattern, or stocks that are actually have broken out of a FUS4 pattern. So let's start scanning through here and see what we got going on. ANTH over here and ANX, these are both potential stocks. Look at ANX, you can see this triangle pattern forming up here. We basically got a revival pattern kind of forming up. So let's take it over to this chart. Look at it this way. We do have this nice triangle formation coming up. It's a smaller stock, only 78 cents, so definitely risky, but looking at it here, it could have potential to be a breakout penny stock, as it is a revival pattern. It's got that nice lead-in bearish trend here, followed by this triangle breakout pattern. In addition to TC2000's features, what I like a lot is the actual trend line feature. So say I wanted to get an alert about this stock, say if it started breaking it above about 82 cents as it was approaching this neckline up here. So I kind of got an alert ahead of time if we started getting momentum. All you got to do is right click a trend line that you draw. You basically click down here, there's a horizontal line, right click the trend line, set alert. I only do alert me the first time it passes, otherwise you're going to have a bunch of alerts if a stock's bouncing up and down above a trend line. Click OK. Now that alert is created. Now I can sit back, not have to watch the stock whatsoever, and be looking at other things. All of a sudden, if that trend line is breached, I'll get an alert on my screen. I can look up at ANX and say, uh-oh, looks like this stock is getting some momentum here. Maybe you want to buy into this before it actually breaks out above this revival pattern breakout. So that's a good way to kind of prepare yourself for potential breakouts. And that's what creating a watch list is all about, is preparing yourself for profits, preparing yourself to make potential trades. A lot of the trades that I alert are actually from the watch list, because I'm preparing myself to potentially trade that stock, and I spotted it before it actually made its significant breakout. So let's keep looking here. ANTH, this is another one. This is another revival pattern that I actually traded on this dollar roll above 1, and this thing ripped all the way up to about 128 at one point. Now it's coming back down. Gotten some big volume in today. I think it had a little bit of news out, so potential there. So we'll throw ANTH on the watch list. And basically, all I do when I send out that daily watch list, I'm just dragging these charts, and then I throw it into my Dreamweaver app over here, and then I send it out in an email form and that's exactly how I create the watch list. But let's keep looking here at a few of the stocks forming up. ARNA, ARNA. You can see this kind of forming this horizontal trend line. Also, this ascending trend line. So let's pull this up. This is actually a stock that I did buy into today. Closed up pretty nice up at 885. But basically, what it is a survival pattern. You know, we have that first initial. This was kind of a force pattern back here that actually ripped huge. Then it kind of got that sell-off, forming up this nice triangle pattern. It's actually bouncing off this support line as well as back above the 50-day moving average and the 13 EMA today. Got a little bit of spike in volume. Closed high on this intraday pattern near highs of the day, so that could mean, you know, potential momentum, as this is kind of an F3 breakout into the close. So that's usually typically a sign of momentum into the following session. So I actually bought into this stock at 870 today, actually right here, which was a F pattern breakout. I don't know why this intraday charting is kind of weird. This spike right here was not actually there, or maybe it was. I actually bought in right about here at about 870, hoping to see this break out to the upside, and then got a little choppy going up here, but then actually broke out into the close up near highs of the day. So basically what I'm hoping for on ARNA, ARNA, is that we can continue to grind this support level and potentially break out above this neckline above 942 and potentially head towards $10 or higher. So that's, you know, great looking chart here on ARNA. Definitely interested in that trade. Let's see what else we got here. I don't think I'm going to go through this whole thing. You know, it's going to take me 20 minutes or so. But just to kind of give you an idea of what I'm looking for, you know, I'm basically just looking for stocks that are potentially, you know, forming up some kind of a FUS4 pattern, one of, you know, the 4 survival, revival, gold, or force patterns. And so this criteria kind of gives you all the stocks that fit a decent, you know, trading range, or stocks that are tradable, and you just kind of scan through all these positions and see what stocks are potentially forming up in this in any of those criterias of the FUS4 patterns. You can also click the technical button, which gives you a little bit farther back view, and they actually draw technical trend lines for you. I don't really like to do this. It's just the time frame is a little bit too far out and you can't really see the charts that well. So I prefer the candle view. But let's see what else we got here on this watch list. I'll just go ahead and show you what else I put up here on the watch list earlier. STEM, STEM, was one that popped up on this list as well. This is a force pattern that has yet to break out. I actually tried to trade this right here and I think right here, and got stopped out both times because this thing just keeps spiking up and not going anywhere. But the chart is still in formation, still looking great, so there's definitely potential for this to break out. So this is a force pattern in the making on STEM, STEM. You know, maybe I want to put a trend line alert if it starts breaking out above this intraday pattern right here, or this neckline right here. So I can just click here, set alert, only alert me once when it passes, and that alert is created. Now I don't necessarily have to sit here and watch the stock all day in real time, as you know, this is the platinum package for $90 a month. That's going to give you that real-time alert as soon as that stock triggers above that trend line, and so you can potentially capitalize on that trade. But you know, that's why I'm here. That's why I have FUS TV, so I can alert you guys of all these things that I'm watching. You know, I'm paying 90 bucks over here, 50 bucks over here. That's why it's beneficial. You know, if you're already a FUS Alert subscriber, I provide these things for you, so you guys don't have to do that. But you know, I want to teach you what, you know, is going on behind the scenes, so that you know exactly where the alerts are coming from and how I'm finding this stuff. But anyways, you know, that's basically how I do it. I have 9 pages of stocks to look through, so you know, it takes time. I do all that for you, but if you guys want to go out on your own and create your own watch lists and try to find FUS4 patterns over here, that's definitely, you know, an option for you to be able to do. And also, there's also signals up here. Top gainers is one to kind of look at the stocks that have the most momentum for the day. So you can click just signal For my watch lists, I usually do none because I want to see what stocks are potentially pre-breakout levels. But if you want to see what stocks were the biggest gainers today, what stocks are moving or potentially breaking out, you can click the top gainers one. NSPH is one that I'm actually in again today. This is a potential force pattern breakout that's been pretty choppy. I tried to trade it right here and got stopped out for a loss, but now I bought back in here at about 344. We closed at 360-ish, and I'm hoping to see us break out above this 380 level and just rip towards 4. But this was a stock that I found off the watch list criteria, and so now this is in a force pattern breakout, and I want to see this hopefully move forward for us.
All right, guys, now I'm just going to go over kind of a real-time scanner thing going on. We just went over the watch list and, learned how to create a list of stocks that we can be prepared for the following session. But, the current trading session, stocks are moving all the time that are, have nothing to do with whatever moved yesterday. So you want to be able to look at what's moving today to find new potential opportunities during the trading session to potentially trade. So, basically what I want to look at is what stocks are currently active and moving right now. So to do that, here in TC2000, it's very simple. You can't see it on the screen, but if you go to the far left of your TC2000 trading platform, there's a little button called Easy Scans. It's a little lightning bolt arrow. And then you're going to get this screen that pops up. And just do create new Easy Scan. And here you're just going to add some conditions that you want to meet some criteria with. So let's pull this down here. What I like to do is first see it's automatically on S&P 500. What we want to do here is look at all U.S. common stocks. So basically, all Amex, NASDAQ, New York Stock Exchange, etc. You want to see what all stocks are moving because I trade on all exchanges. Another condition we want to see is price. I don't care about stocks really that are trading at $100 per share. I mainly trade stocks between 50 cents and $15 per share. So we're just going to take price history. We want let's see. All right, so we're just going to do less than price history on the daily. We'll just do $15. So you can set this to whatever limit you want. If you want to only look at $5 stocks and under, can limit your list even more. You can do that. But I like to look at stocks under 15 bucks. So we'll do price history less than $15. Another condition is percent change since the open. I only really want to look at stocks what's moving right now on momentum. So I usually just look at stocks on a time frame daily. What's moving over 2% so far today. So stocks that already have started out, slightly open today. You can do whatever you want here, but I just do 2%. Looking at stocks that have made at least a slight gain, so they're on the up and up. I'm trying to buy into momentum. I'm a momentum buyer. So looking at that condition, very simple. Just looking at stocks that have been opened and are moving up over 2%. Another condition is volume. Not actually volume, we're going to do volume 1 day. So today's volume is greater than, this can be, something that you can pick and choose. I change this criteria as the day goes on. For this condition, since we're just looking at 1 day volume, when the stock market opens at 6:30 a.m. my time here on the West Coast, there hasn't been any volume yet. So I usually start out the day with about 15,000 shares on volume because you don't want little stocks. There's a lot of low float stocks that have no volume whatsoever, but they might be up 20%, but they're a stock that you wouldn't even consider trading because it's such a thin stock and you don't even care about it. So you want to be changing this as the day goes on. Right now it's 10:43, so there's 2 hours left in the market session today. So as of right now, I don't want to see any stock that hasn't traded at least, let's say, 200,000 shares today. And you can change this to whatever criteria you want, but you want to have a limit on what volume there is there, because you don't want to have a bunch of bullcrap stocks. I don't care about a stock that's only traded 50,000 shares today, so I don't want that, diluting my list of stocks that is created here. So for now, we'll just do 200,000 shares. And this is pretty much basically all you have to do. This is going to give you the top list of what stocks have moved over 2%, have been trading volume under $15 per share. And this is a great way to see what stocks have moved and what stocks are moving. And you can scan through these all day, looking at what stocks are trading intraday and potentially forming up F1, F2, and F3 patterns. And also, I look at them both on the daily chart and intraday chart. So let's do live results here. From here, we get the list of what stocks are going on, and I usually sort it in what stocks have made the biggest gain yet. So EBOD, this is the top gainer of the day. This was a huge earnings play. Another Profit League guru actually alerted this morning at 225. This is a very low float stock. This isn't something that I would typically play. But it did, absolutely rip up. It's 80% here. But as you can see before, yesterday, this stock was non-existent. It had 800 shares traded yesterday. So, this is a very speculative play. This was basically pumped up today, on that push. So it was definitely a little bit manipulated there. But, there's other stocks here. MITK, MBLX. This is actually an F pattern that I traded today. I just scalped it, but this was on the list this morning. Basically had this big, huge open on news this morning. Once that ripped 142, I went long. I sold at 153. So I took that quick scalp on MBLX, and this was all because it was sitting here on this scan, and I saw that it had that gap open. There's a perfect F pattern, broke at 142, and I was able to scalp that. So it's definitely, very beneficial to have a real-time scanner of what stocks are moving today. Another one was PLAB. I actually didn't trade this, but this was a perfect F pattern earnings breakout. Let's see, Plantronics reports fourth quarter results. Quarterly sales were 104 million, exceeds guidance. So when a stock breaks out of guidance on earnings, that can definitely be a huge move. And look exactly how this started here on PLAB. Perfect F pattern breakout right here. This was forming up here. As soon as that ripped 507, this thing just absolutely ripped and just continued right at 13 EMA on the 2-minute chart all day long. And now it's just kind of trading flat, but it's up 13.5%. But basically, just it's very wise to have a real-time list of what stocks are hot today, and you can scan through all of these and see what's going on with these stocks. And it's changing all the time, so you can click the live results tab, and so this is going to constantly be changing of what stocks are potentially moving now and whatnot. So that's basically just a real-time scan using TC2000 just to see what the most active stocks are today, to find F1, F2, and F3 patterns, and hopefully find stocks that are both have a FUS4 pattern with that actual F pattern.